Bill Dodwell's company was the one that helped Starbucks arrange their affairs so that they paid no tax here in the UK. Yet suddenly, magically, after we put the spotlight on them in the Public Accounts Committee, they suddenly offer to pay in a voluntary way 20 million pounds. And let me just say the other thing. People always say it's within the law. It isn't as clear as that, Jim, because if I just quote from a judge in one of the key cases which says it, accounting treatment is dictated in part by professional judgment. So it's an interpretation of the law. And what these guys do is exploit that interpretation in a risky way to ensure that these global companies don't pay their fair share, or rich individuals.
Right, we're in a grey area here, but as I understand it, what the companies are saying is we don't practice aggressive tax avoidance. Of course,
and they don't.
Of course, we recommend...
Well, hang on a minute.
Well, hang on a sec. I'm just going to ask him a question, then you can come back in. But you do advise people how to reduce their tax bill. Now, do you think that any fair-minded person looking at the Starbucks case would say that that is not aggressive tax avoidance?
Yes, and Vince Cable, the business secretary, looked at it with his officials and he told us that he thought the company did not make a profit in the UK.
Why have they not offered £20 million in tax?
I think that will be for them. I'm slightly mystified by that. I wonder...
You don't think Starbucks should have to pay up anything?
Well, Vince Cable looked at it, and I think, to be honest, I'm prepared to take his view on that, given he spent time looking at...
Oh, Bill, that is nonsense. This is a company that for 15 years filed accounts in Companies House saying that they were making a loss. They were expanding here.
Do you think that hang on, just a second. Do you think... I mean, I'm sorry, I have to keep myself calm here. Do you think that Starbucks does not make a profit in this country?
Yes. And Vince Cable thinks that. He's spent time looking at
hang on.
The Financial Times.
You can arrange your books so that you don't make a profit. Transfer pricing, which we don't need to go into here, but involves all kinds of internal machinations in the company to move the profit you make from one place to another. Are you saying that when people walk down the street and they see all these Starbucks and they go in and they pay £3 or whatever it is for a cup of coffee, they are going into a company which makes no profits in this company?
I think there's a complete disconnect between people who think that maybe a company should be making gigantic profits and then they walk past the shut-down HMV and Blockbuster because the retail environment in the UK is very
I'm sorry, I'm still having difficulty here.
No,
you're
looking
your perspective. But hang on, it's not a perspective. Listen, I'm looking at you across the table.
Indeed.
And you are looking at me.
Yeah.
And you are saying that Starbucks, on every high street in this country, do not make a profit in the UK.
Well, you should ask them those detailed questions, and the figures that they gave to Vince Cable, that Vince Cable was happy with...
But that's because they have a mechanism which you invented.
No, it is not because they have a transfer pricing mechanism, what you're referring to.
Starbucks...
The reason they are losing money in the UK is because their rents are much higher than some of their competitors and their staff costs.
Bill, you're coming.
Really? We shouldn't discuss that one case.
No.
Well, I can understand why.
We should discuss it because actually the accountancy firm do have a role to play in this, and this is why it's not so black and white what's in the law and what's isn't the law, because the companies then sign off that this is a full and fair account of what happens, of whether or not there's a real presence here in the UK. And what we got out of really good investigative journalism, Jim, it wasn't us, what we got, there was deliberate ways of how they paid for the coffee beans. They paid a 20% markup in Switzerland. How they paid for the brand, they paid a 6% markup in Holland,
with the money.
And how they had to pay for their capital. That was the way of getting the money out. And they were saying one thing here to the Companies House, they were saying another thing to their shareholders, and they promoted the guy who was in charge of here because he was so good that he went and ran the American outfit.
What we would like to do, and if anyone from Starbucks is listening, is to talk to poor old Starbucks about how they're losing all this money in this country and failing to make a profit. And no doubt all the retailers who sit beside them on the high street would like to come on and say that...
Small coffee shops.
They're doing even worse. Well, there we are. We'll leave that one to stick to the wall. Bill Dodwell from Deloitte and Margaret Hodge from the Public Accounts Committee. For the moment, thank you both very much.